Joining me now to discuss all of this is Jefferies Weisfeld, Managing Director and U.S. Technology Sector Specialist over at Jefferies. Jared, good morning to you. Thank you very much for joining us this morning. Let's take us through whether or not this is a buying opportunity.
Good morning, Dom. Thanks for having me on. Yeah, so listen, I think in the previous segment you summed up exactly what's really impacting the sector here, and we can't underestimate the fallout from the ongoing geopolitical conflict. I think Meta is a great example where even just a few days ago they talked about contagion from the broader conflict spilling over into Eastern Europe. We saw the same thing from Booking.com in terms of just an impact on the business. So you really have multiple factors impacting technology sector performance and sentiment, including geopolitical conflicts, but also, keep in mind just the rising interest rate environment, and technology is certainly the most susceptible in that, and we'll get more color here in a few days from the FOMC. But in general, yes, for sure, you have multiple headwinds, but there are buying opportunities emerging as growth becomes more scarce. I think you're going to see investors flock to names that are more secular oriented as opposed to cyclical. So I certainly think we're going to see a bottom forming here, especially in the software sector.
All right. So you say the software sector. Are there specific areas, specific companies that you think are more compelling to you at these levels? You mentioned before this notion of people kind of flocking towards that growth trade in technology if things start to really show a slowdown. I remember just in months past, we had talked about this idea that some traders and investors look towards Apple as almost a safe haven trade. Are there places that you think are more attractive right now?
Yeah, for sure. So when you just take a step back and you look at a lot of if you look at the number one area of growth within software, it would certainly be anything levered to the public cloud. You look at the growth rates at Amazon and Google and Microsoft, those growth rates remain unabated. So you certainly want to look to names that can benefit from the infrastructure growth that's associated with the public cloud. Also layer on cybersecurity in terms of the global geopolitical outlook that's currently unfolding and the global cyber attacks. We've seen incredible results from the entire cybersecurity complex over the last couple of weeks, including the likes of Palo Alto and Checkpoint. And even CrowdStrike last week. So I certainly think that you're going to see continued momentum in the cybersecurity sector as well.
All right. So cybersecurity, certain parts of the software industry for sure. Jared, before we let you go, we'd be remiss if we didn't talk a little bit about the macro interest rate environment right now. Is it at all plausible that tech trade is already embedding in future rate hikes coming from the Fed? What's expected at least right now?
Absolutely. So take a look at what's going on with the 2-10 spread, which is basically the spread between the 2-year and the 10-year yields. That's now at 20 basis points, and that spread has successfully predicted every prior recession as that goes to zero or potentially inverts what I was talking about earlier in terms of growth becoming more scarce. So you've seen a lot of these names come down 50 to 60%, and these growth rates that we're talking about still remain incredibly robust. The one thing not to forget about is I do think there is a private equity put, if you will, in terms of a floor on many of these names. We've seen Citrix get taken out by private equity. We've also seen a strategic put in terms of Microsoft for Activision. So there continues to remain a healthy number of potential acquirers for the entire sector, which should also act as a tailwind going forward.